Hey guys, who has seen this chart bouncing around the internet, bouncing around social media, even on your local news, and you are upset, you're frustrated, you're confused, you don't know what to do next? Guys, I get it. I'm all of those things too, except I do know what to do next. Hey guys, my name is Mark Eitel. I host the Mr. Mortgage radio show and podcast each week from coast to coast. We're all over talk radio. Check us out at mrmortgageradio.com. But I also run the Mr. Mortgage team. We're a national mortgage brokerage team helping families finance and refinance real estate all over, everywhere but New York. Hey, sorry, Big Apple. But guys, back to the LLPAs. This is the loan level pricing adjustment heat map, the matrix that's been bouncing all over the internet. And guys, these aren't new fees, but they're changes to existing fees. And it denotes who's being most negatively impacted and most positively impacted by the changes. And I've seen all the social media posts, guys. I've read them all. There's a lot of good information, but a lot of misinformation out there. So I wanted to take just a minute or two and walk you through it. First of all, these are not new fees. You guys, we're all paying these fees already. So not new fees. That's the misconception number one. Number two is, there's number two. Number two is that this is not a lump sum fee being added to your closing costs. As I mentioned, you're already paying them. And the reason most people don't know they exist is because they're built into the interest rate. So what this means for most people on that chart, your interest rates are going to go up a little bit. So number one is not new fees. Number two, not a lump sum fee being charged at closing. And number three, guys, if you've already gotten your mortgage, this doesn't matter to you. This has zero impact, zero effect on new mortgages. So now we got that out of the way. What's got everybody so upset is higher credit scores and decent down payments are being negatively impacted. And that's what people just don't understand. And guys, I don't judge anybody by their credit score. Good people have suffered bad credit score events in their life. Me personally, I've had amazing credit score and I've had a crappy credit score and I worked my way back. So zero judgment on score, but in the world of mortgage underwriting, credit score is a risk assessment factor. The lower the score, the higher the risk associated with a loan. But guys, look at this chart. The lower credit score and lower down payment is seeing a fee reduction. And that's what confuses a lot of people. One thing I want to throw out there and get this out, the higher credit score borrower is still paying less of a fee than the lower credit score borrower. They're just moving them closer together. They're taking the lower credit score borrower and reducing the fees, and the higher credit score borrower's fees are being increased. So those numbers are starting to become closer. But it's still proportionate to credit score risk, the fees that are being charged. I guess, guys, the biggest thing I want you to take away from this is call somebody, have your mortgage professional. We're happy to do it. We're answering calls every day about this. If you're looking for a loan, you need to look past these scary headlines. It's not as simple as Robin Hood. Rich are being robbed to pay the poor. Although there is some, risk assessment balance that I don't understand, because it makes zero sense to me that a 740 credit score borrower with a 20% down payment is paying a higher LLPA, loan level pricing adjustment. Guys, it makes zero sense. And I'm not making this political, but this is definitely a governmental money grab, and they're grabbing it from the people that are most capable of paying it. So guys, any questions about mortgages, about LLPAs, about programs that are available, or more importantly, workarounds to these prices, reach out to me, guys. We've got some strategies in place. We're already prepping our clients on how we're going to work around some of these LLPAs and still get them the best rate in the market for them at that time. Guys, again, Mark Eitel here with the Mr. Mortgage team, the Mr. Mortgage show. All my contact information is somewhere around this video. Reach out, let's connect. I'm happy to talk. We'll figure it out. Thanks.